Hi, everyone. How's everyone doing today? How are all you maverick people doing? Unusual avocation. Most people are afraid to do what you guys are attempting to do. So I congratulate you on your bravery. Hi, Scott, Brock. Everyone doing okay? So, I'm still in the bearish bias camp on the dollar. Oh, before I really get going on analysis, hi, Sean. Can anyone tell me what's missing on my chart? If you guess, hi, John, if you guess, you get a free copy of Use Less Leverage. Can anyone guess? Oh, Stavros. Stavros was for. So how do I do anything without RSI? I'm blind without RSI. I don't know what's going on. Are these markets diverging? Confirming? So you know what? Watch this. Can one of my teammates tell me how to get RSI back on my charts?
Double click on the chart. Double left click on the chart.
I did.
It should work. It works for me, unless by mistake you completely removed it.
I think I was just using these arrows to move it up and down, and then it disappeared. But
Okay,
that's it.
Are you sure you double clicked? Left click, right?
Yeah.
Okay, then go to indicators on the top.
That's it.
It is the symbol next to the plus sign, more to the left.
This.
More that one, yeah. Okay. Go to the search bar and type RSI. Yeah, there. There you go. First on the left, on the right, sorry. Happy?
Where is it? There it is. Okay. All right. Yeah, you know what?
That's going to be $20.
I just take it out of my check. It's worth it, man. Because without RSI, I tell you guys, I would have to, I don't know, drive an Uber. Okay. So it's a real surprising indicator that I'm using. Anyway, so I'm looking at the dollar here. Thanks, Steve. You know what, guys? I am very, very, very low tech. Okay. My teammates have dragged me into it. They all make fun of me. And they're right. I'm a dinosaur. Anyway, so here we have, the Dixie grinding up. I didn't do any fibs on this, but I'm going to give it the benefit of the doubt. One thing I'm looking at here is, this wedge that we broke down out of, and this could really like send a scare. And if we got all the way up to here again, I mean, if you look at this and if this is good, low's going to hold, I think we need action back under 7.5 to get real bearish. So, I'm tempted to buy the euro, but I look at it right here on the daily. I don't know. I would just be buying it because of my bias. I don't see anything technical for me to do it. And the same holds true for the Swiss. Getting this rally, it's trying to reverse here. But if the dollar has more in it, maybe the Swiss does. But, this could be a good area. Look at what we're doing right here. Okay, so I may end up doing something here in Swiss because, Swiss didn't hurt me while the dollar was still going up and the euro was still grinding down here. So the Swiss was actually dropping. Steve explains it with the euro Swiss pairing. So I might try that. Something else that, my bias is a lower yen like Blake. But, I look at this a bit, and here's your daily, and it looks like we really need to take out the 200 here. And so far, even though we pulled back this week, it's a higher low. And it's hard for me to want to be bullish here because I think we did get a top in the S&Ps yesterday, but maybe bonds and stocks could go down together. Although the TLT is putting in some nice action and yields have fallen, you know, doesn't mean that we can't make another charge in yields. That's a 10-year. That's a 30. Doesn't mean we can't make another charge in yields and get another push in yen. So I feel conflicted about a lot of things, and I don't feel that I have to trade. Who cares? You're dying. Who booked? Oh, thanks, Scott. Anyway, the one thing I do have some conviction on, I think this is a high, guys. I know you, Steve, the broken clock strategy. Blake hates this, but you know what? The turnaround Tuesday call was pretty good, don't you think? We're supposed to just not take victory laps, but every once in a while, just so you know that, things can work. And, I'm thinking if we get a rally back to 3120. So you notice I went through a bunch of things that I have IDK on. I don't know. It could work. Why not stick with whatever got you to the dance? So, if you get into the zone on one instrument, like Blake is working yen, US dollar yen has a lot of conviction about it. Why stray, like if you have a good woman in your life, why stray, just because something sparkles and gets your attention? Or if you're a woman, you have a good man in your life, someone might look better, but is it better? So here we go. I would love a rally to 3120. So I have two reasons. If this happens today, and then I'll risk the high of the move. If we get up to 3120, the reason I'm looking at that is I think it'll be between a 50 and 61.8% retrace. But the other reason is, something else I use is simple, stupid Forrest Gump crap, right? And that's looking at counting back two candles, looking for two candle reversals. See, this is how I lost it with these arrows, moving it out of the way. So move pain down. Yeah. So if you count back 2 days on the S&Ps here, look at that number. What was the close? See that 3120? Okay, so I have 3120 there, and I have, where is it here? On the 15-minute, and I have 3120 here. So, with a couple of things there, and you probably have some fib extensions, that's what I'm going to be paying attention to today. And I really don't have to do anything. Maybe I'll miss it. I may take a shot at the Swiss, but when you go through the board, and I'm sure all the guys on the team and all the people in the chat room have higher conviction ideas and lower conviction ideas. I say this: trade your high conviction ideas and just wait until your lower conviction ideas give you more confirmation, like Steve Volge does. Okay, that's my advice to me and to you guys today. And I just want to show you guys something here. Trade high, you do that? Yeah, I can't trade unless I'm high. So check this out. I'm gonna open. Oh, that's not what I wanted to do. Okay, anyway. The great work that Joe Perry does to let the world know about us. So you can't read it, but best, let's see, where are we? It had to do with education. Maybe it's the other slide. Here it is. Look at this, guys. Outstanding performance, best financial literacy tool. And you know, what a great category. Because can you trade if you're illiterate with market knowledge, right? So literacy, you know, most people associate it with being able to speak and write. And financial literacy means that you know what's happening out there. You don't need some guy to tell you, oh, you should be a third in bonds, a third in stocks, and a third in cash, because you're literate. And if we're helping people get to this goal and we're being recognized by Benzinga for doing it, I believe we're on the right track. So if you're fairly new or a veteran, you may want to consider. Let me get my Skype off here. Nice work, Joe. Nice work, Joe Perry. Getting the word out about us. So you want to be literate? Here you are. I know a lot of guys don't come for my segment because I sell. Oh, what a dirty word. I'm trying to convince you. But you know what? This speaks for itself. Who's going to risk $1 today that hasn't taken a trial? Also, Joe will be on Bloomberg today. You could catch him at 2:30 Eastern time. Okay, does a great job on Bloomberg. Plus, he has a famous ForexAnalytix stance that he strikes every once in a while.
He's known as Joey Bloomberg.
Joey Bloomberg.
Joey Bloomberg. Joey Bloomberg's going to be on.
Joey Bloomberg, then I'm going to have to give him a bar mitzvah.
He does the stance because he thinks that Abigail thinks it's sexy.
She does. She's crazy about him. Look,
she does.
He's going to bring a bodyguard there.
Yeah.
Oh, you know what? Bring your wife to get her off your back for this appearance, Joe. All right. How you doing today, Blake?
I'm good. I'm good. It's hump day today, so
yeah.
Hump day is a good day, right?
Yeah.
Did you say hump day?
Yeah, it's hump
day.
day.
You know what? Oh, don't get Steve going.
Not that kind of hump, Steve. Camel hump.
Steve actually found one transvestite.
Like, let's send your wife to work really fast, so because Steve's looking around for hump day. That's good.
In all honesty,
he found one transvestite in Greece.
Yeah, the one.
Anyway. In all honesty, I don't know the alternative interpretation of the word. So what is it?
Yeah, the midweek day. Happy
it's
midweek
like going
day.
over a hill. Like
Yeah, a hump. Yeah, a hump would be like the camel's hump is the hump on the back. The ridge on the
and
back.
then it's downhill.
It's downhill.
You get to the hump the rest of the week.
So it's not the hump day like you're thinking like bunny rabbit humping.
Yeah, pull your pants up, man.
All right, let's great. It's hump day, everybody. He's running around his wife's.
Anyway, let's hump some of these markets.
The house.
Let's hump these markets, man.
The Americans say it's hump day. Let's do this thing. Okay.
All right.
Good morning, guys.
Good morning,
today it's been a pretty slow market. Stocks are down a little bit. You were talking about yields, and I'm gonna take your attention and pull it over here to the 10-year. And the 10-year it's actually pretty important because we've got this inverted head and shoulder pattern looking thing. It's not the best head and shoulder pattern, but it's not really the most important thing to me. What's most important is the false breakdown of the. Now, keep in mind, 10-year bond market broke a 1-year trend line last week. Was it last week? Week and a half ago. We broke. Well, I guess it was last week. Anyway, we broke a 1-year trend line. Started to sell off, and I looked at it and I'm like, oh crap, yields are going to rip. China deal must be going through. Here we go. And then, you know, obviously this week we've turned things around, and I've been watching it, and you know, this is on the week ahead video too. I was like, you know, we get above the 38% retracement, and now we have a false breakdown in bonds. Everybody's short bonds. Who isn't short bonds?
Well, I think the DSI's are in the 30s, right? And it used to be in the 90s about a month or two ago.
Yeah, I have to go back and take a look at what it was overnight. But I'll tell you,
More bears now than in a long time.
Yeah, a lot of bears out there. A lot of people thinking yields are going up. There's definitely a China-U.S. deal going to come through. So let's, you know, this is the get long S&Ps, short bonds. You know, yields are going higher. Boom! It's the trade of the millennium, the century, the, you know, year, whatever. It's going to make my year-end bonus. So we got bonds actually reversing course. Yields are coming down. Now, one of the key components to like my conviction of the dollar yen, and by the way, it's hard staying short the dollar yen. I'll be the first one to admit. You know, you get a China-U.S. trade deal coming through the wires. I'm going to get stopped out pretty fast. I'm convinced of that. But you know, my conviction has been, or my idea has been, I don't know if the U.S. and China are going to actually finalize a phase one deal this year. Could be, you know, maybe not next year. I don't know. I just don't know. I don't. And you know, Market News International, M&I just put out a piece saying that, you know, they talked to, you know, some government officials. They're just sources. You know, no one knows, but that they have no more concessions for the United States. Market News International, just FYI, is notoriously a bearish, headline grabbing news agency. They really put out news for clickbait. So I don't read.
Oh yeah,
yeah.
They call that bear porn.
Yeah, it's almost as bad as Zero Hedge, really.
Okay,
Market News International really skirts that line. So I don't
like Kitco and, you know, all
yeah,
the bears.
yeah, I don't read too far into it, but I am in the belief that China will not concede. You know, the administration, the Trump administration, has to roll back tariffs, and I think if they do that, then they might have a deal in their hands. If they're not willing to roll back some of these tariffs at the you know, numbers that China wants, I don't know if a deal is going to get done, at least not by the beginning of this year. And I was telling the guys and gals in the chat room yesterday, I'm like, you know, if China really wants to put the nuts to Donald Trump, and you know, let's put yourself in their shoes. This is not. I don't want this to be a political talk. I want this to be think about it from China's point of view. You know, you got this president that's been very aggressive, this U.S. president. China's got to make things work in the U.S. because it is really hampering their growth. I believe it is really having a negative effect on their growth. But at the same time, if you think about where China is and where they've been, you know, can they really say, yeah, we can eke out another 12 months of really slow growth? And, you know, what's it going to do? Is it going to reverse, you know, 30 years of growth that we've seen in China? No, our people have been suppressed. They've been poor. We can weather the storm if we really need to. So you have this very, you know, aggressive U.S. president that really hinges all of his, you know, his clout on the stock market. So if I was China, and I'm going to think as a very proud Chinese leader, very proud of what we've done as a country. Now, you could, I would disagree. I wouldn't be proud of if I was China, because they've just, you know, ripped off all of our IP and blah 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 blah. I'm definitely pro-American in that regard. However, I'm trying to play devil's advocate here, but look at the other side of the coin. If I was China, and Chinese, I am half. I'm half Chinese, born in Taiwan. We're actually all Taiwanese are actually Chinese. So just so you guys know, but I was born in Taiwan, but I know the Chinese culture, and they're very proud proud people. Wait, hold on. Sorry, I was just listening to the squawk here. So if I was China, and I'm very proud of, just very proud people just in general, and I really don't like the current U.S. administration, and I really want to put the hurt on Donald Trump. If I was going to do that, and if I was China, I'd probably wait. I'd just prolong this situation for like another, couple months and wait till the beginning of the year, and then walk away from the bargaining table, because that would send the stock market into an absolute tizzy. It would, stall economic growth, probably globally, but then, China would leave Donald Trump with really no, like it would really hurt him politically if the stock market took a severe tumble. I'm in the camp that might be the case. I think they are going to at least prolong this at least till the beginning of the year. And as the market becomes more, aware that, a China-U.S. trade deal may not happen, then I think that the yields will continue to drop and the dollar yen will eventually drop. That's my thesis. Now, whether I'm right or wrong doesn't really matter at this moment. That's just kind of my working thesis. The thing about the dollar yen that I'm looking at, because I'm trying to trade price action, because this, like I said, this is a very difficult trade. You got a lot of people that are in the idea that, hey, stocks are going to continue to rally. There's a lot of pent up demand here, and on a positive China-U.S. trade deal, stocks are going to continue to rally. I get their argument, but what I'm looking at price action wise is, why isn't the dollar yen going higher? And why aren't yields going higher? Why aren't bonds moving lower? And why isn't the dollar yen trading at 110? We've been making this argument for the last couple of weeks. Amanda's been really vocal about it in our chat room the last 2 weeks when we were failing at 109. Paulie on his daily webinars multiple times a day talks about, the dollar yen and why isn't it up? Why isn't it up at 110 right now? That price action is a little telling at the moment, and being short the dollar yen, I'm not convinced that I need to cover. Now, looking at this triangle, what I'd like to see, and what we're probably going to see here, and I'm trying to be realistic, is we're probably going to get a rally today, and we're going to move back up to 108.80. That's realistic. I actually have some room to add dollar yen because I closed some of it yesterday at 108.40 something. Yesterday, like right around here, I closed some of it down here, so I can add back on a rally. What I'm really looking for is a move below this 108.25, because if we move below here, then that means that this triangle is probably breaking down, and we're probably heading back down to 107.50. And then I want to be a little bit more aggressive. Oops, below here. Because I think this actually changes the entire structure of the chart if we break below 107.88. I was reading JP Morgan as well. JP Morgan, their daily technical piece, that's the level that they're really focused on right now is 107.88. So anyway, just some food for thought on why I'm still short the dollar yen. Now, am I thoroughly excited about being short the dollar yen at this point? No. Have I been working this position for the last week? Yes. Has it been frustrating? Yes. I think my cost average is 108, roughly 108.60. I'm definitely not making much headway right now with it, but I'm maintaining, because like I said, if stocks are higher right now, and we're at all-time highs, near all-time highs now. I mean, I know we've come off today, but we're near all-time highs. Why isn't the dollar yen trading at 110, 111? Maybe it should be. Maybe the market will say, oh crap, why are these yen pairs even here? And they'll start taking them higher. But right now, price action is telling me that it's trading heavy. I know it's bid up right now, and it's overnight. It hasn't moved a whole lot with the move lower in futures, but overall, it's kind of weak, I would say. And then you got yields that are moving lower. You got bonds that are moving up. And one last chart I want to bring to your attention before I go, because if you follow me on Twitter, you probably saw a tweet that I put out a couple of days ago. I'm watching gold, bonds, and the yen. Everything else is just noise. It is. But gold, let's not forget, gold is in a big pennant formation right now. Big, huge, bullish pennant. Now, am I bullish gold at this very second? No, I'm not. But I'll tell you, above 1,500, I would be really bullish. And that would be bearish dollar yen, FYI. If this is one of those situations, if you start to see gold break above 1,500, I know that I'm at that point in time, the dollar yen's probably trading below 108. But at that point in time, I know I'm on the right side of the trade. If I see gold breaking higher, I see, bonds continuing to move up, yields going down, then I know that being short dollar yen is the right trade for me. So that's why I'm keeping an eye on gold and yields and dollar yen. Obviously, stocks are having an impact on what I'm doing, but it's not the end all be all, because we've seen stocks move higher and the dollar yen hasn't been doing much. So anyway, that's what I'm looking at right now. The euro's at its lows of the day. It's I'll let Steve go through some of the majors here. Euro's at the lows of the day. Not really too excited about the euro at the moment. I'm not excited about much of anything, frankly. I even though I'm short the dollar yen, doesn't mean I'm super excited about it. I'm really not, actually.
Doing anything in MEX, USD MEX?
No, I'm a little frustrated because I'll tell you why I'm frustrated. This was major support here in the dollar MEX at
1924.
24.
Yeah.
Friday, I bought it at 1924.
Yeah.
And then I sold it at 1922. And I'm like, I really needed to hang on to it. I knew I needed to hang on to it. I just didn't. It's like I didn't want too much risk off exposure because I'm short dollar yen. If I'm long dollar MEX, it's just like it's almost the same trade. It's a different position, but
that's understandable.
It's like I took it off and I knew I wanted to keep it on.
It always has more beta than the yen, though, doesn't it?
It does. Yes, it definitely does have a lot more volatility. And so, looking at it right now, I'm like, I should have kept the damn thing. But, obviously, I don't live in shoulda, coulda, woulda world. I just don't.
I used to.
I never do as a trader. And
it don't do that. It leads to depression.
No, it does. And I have, my son, my youngest son, and by the way, I think we have data coming out here in just 1 second. I'm just pulling this up really quick. Yeah, we have Canadian data coming out. So
data from Star Trek.
And I don't have any Canadian exposure, so I'll cover this with you guys really quick. And Steve, you're welcome to chime in. But I wanted to say my youngest son, I let him take control of my flag football team, our flag football, fantasy football team this year. I pay for it. It's kind of an expensive league for flag foot or for fantasy football, but it's one I've been in for years. And I let him control it because he's so competitive and he loves it. And he just, anyway, he always comes up to me, the week after or the day after. It's like, we shoulda. And I'm like, look, we did what we did. We made the best decision we could make at that point in time. Do not live in shoulda, coulda, woulda world. We made the decision that was right at that moment in time. And that's how I look at trading. I made what I consider the right position at that moment in time. Things happen. The world evolves. You have to suck it up, buttercup, take your loss and move on, and then that's the thing about trading is that's
going to help him in his life, Blake.
I hope so, because
he's one of
those people that
you're programming him still.
We should have done this.
I'm in a fetal position.
But you didn't.
The market burned me.
Take your loss and okay, hold on. Data coming out.
That's so boring. Everything's in line.
Everything's in line. Yeah, you can see all the data just came out. Oh,
I
like
tell you.
hey, CPI month over month in line.
Coach.
All right. Well, dollar
I
yen's.
lost money. The market burned me.
I know. It just
It was
you
a
know,
market, something
traders
impersonal.
that do that too. It's like, look, you push the button.
But we got
You
Blake going.
you push the button. No
Yeah.
one convinced you to push the button.
It wasn't the
No,
market that.
No, and it's like oh, it was somebody else's idea. Well, then don't do it. You have to use other people's ideas to confirm your own ideas. So I use like here like great examples. Grega or Andre, they do a lot of reversal work because they're doing Elliott wave and candlestick or Elliott wave and harmonic analysis on ForexAnalytix. I see an Elliott wave count come out from Grega, and I go, and he's like bearish. I don't just go off and sell it, but if the Aussie was on my short list of things that I wanted to short, I would say, okay, well, let's see, what is he seeing, and then I'll read his analysis, and then I'll use that to help confirm what I'm doing. But I don't sit there and go, well, if Grega would have. No, I made the decision. I made the decision. I used Grega's information to confirm what I was thinking, and hopefully it did. But
You're never going to get better until you take responsibility for all your actions in the market.
No, never. Yeah, I 100% agree with that. Anyway, I'm gonna turn it over to you guys. Have a great day. And
Blake, I covered S&P too soon yesterday because you said you weren't sure it was going to top.
Yeah, it's all my fault. All my fault. Shoulda, woulda, coulda. Suck it up, Buttercup. All right. See you guys tomorrow.
It made me mad.
See you guys.
Steve, you made me do something wrong.
Bye-bye, Blake.
Bye.
Oh man,
Huh?
what can we say about these markets, man? What can we say? I've been, I was sitting here last few hours looking at what's happening in the world, in the markets, and it's like we can't make too much sense of anything at the moment. It's all a lot of question marks, and US, China, and you get UK and stuff happening in Hong Kong. It's it's quite difficult. But let's start with what actually happened last night. I don't know if Blake mentioned it. I missed the first 5 minutes. China's central bank cut the short-term funding rate by 0.05%. So really, pretty much nothing. But obviously, it's not about the amount. It's about what signal it's
The
giving.
direction.
And
What is the rate?
2.50.
Thank you.
From 2.55. The thing to remember is that they actually cut their medium-term borrowing cost, which banks use it for funding, by the same margin about 2 or 3 weeks ago. I can't remember, but pretty short term as well. So they're cutting rates very slowly, but that's what they did last night. I didn't think it would really have any effective impact in the markets, but it's all about the message and the sentiment that they're trying to push. But apart from that, Steve, I mean, I've got absolutely nothing to say. We've had no progress anywhere. Well, we're making progress on Trump's impeachment process. That's one thing. But
yeah, good luck with that.
Yeah,
I'm
not going to go into that. We've seen in the past that even Nixon, right? He was he resigned, right? He resigned before anything could happen. But
Nixon resigned because in his case it would have been a certain impeachment. That's why.
Yeah, and so I mean, I really don't know what more to say today. I'm struggling to find anything interesting to say.
Come on,
yeah,
think of something.
I guess we're waiting for the FOMC minutes. Joe is saying, okay, yes, there was a debate between Boris Johnson and Jeremy Corbyn yesterday, but from what I've read, I didn't actually watch it live, but from what I've read, both sides just keep saying the same things to each other, making zero progress. Corbyn is constantly promising to basically spend money giving money to everybody, which is what every good socialist does. And the two men are just completely in different how do you say it, mindsets, and they just we had nothing new out of yesterday's debate, which is quite disappointing. So we wait.
Stelio,
Yeah.
what have the polls been showing recently?
Conservatives are ahead by, it will depend on the poll that you look at, but on average, conservatives are ahead by quite a margin, like double figures. So, and surprisingly,
I'm half tall.
surprisingly also, it's not the difference that they have. It's not the difference they have from Labour. It's also that their percentage in absolute terms is rising, which means that the Brexit Party is losing, and people are moving away from the Brexit Party into Conservatives or Labour, or both. So it's going to be between Conservatives and Labour. Lib Dems and the Brexit Party are actually dropping, but again. Anything can change in 2 weeks or 3 weeks. What's the we're three weeks away now. So it looks like conservatives are ahead by a margin, but that can change obviously.
I personally kind of doubt it, to be honest. I think that's more or less going to be the outcome, but you never know. I mean, we've seen surprises in the past. I don't think that's going to be one of these cases, but time will tell.
One of our viewers is saying that there was a YouGov poll saying that conservatives lead by only 3 points. I didn't see that, but I've seen quite a few polls over the past few days, and they're all around double digits. So maybe you get the odd one, which is different. I don't know, but conservatives are ahead. That's for sure still the case.
Gautam, we forgot to mention that Gautam is also mentioning the Senate passing the bill for support of Hong Kong, and I'm assuming he mentions that because it might reduce the chances of passing some kind of a deal with China, and that is a valid consideration. So yes,
what's it like, a resolution condemning their behavior in Hong Kong? Is that what they're talking about doing?
I think more like support of the rights of people in Hong Kong. Yeah.
Okay, but with no teeth. It's just like a statement.
You know how that is.
Yeah,
right?
that's what I'm saying.
Yeah, exactly. I mean, you just want to
change anyone's mind.
Yeah, I mean, you just want to show, that you're on the right.
Yeah,
the
lip
right
service.
Side.
It's bullshit.
Yeah, exactly. That you're at the right side of.
I'm pretty subtle. It's bullshit, everybody.
It is. To be honest, it is. I mean, anything that doesn't have some kind of real effect, like sanctions or whatever. I mean, it's just talk. I mean, who cares about talk, right? We've seen that in the past. I mean, we know that China doesn't have a democracy. We've seen the same with Russia, that theoretically speaking has a democracy, but we all know that Putin is the man in charge
the
there,
emperor,
no
the
matter
Tsar.
what.
Yeah,
the Tsar, exactly. So we know that they don't sweat about any of the condemning declarations or whatever else.
Wagging our finger at them.
Yeah, they couldn't care less.
People get killed.
Yeah, they couldn't care less. And you know how it is. I mean, every country is mostly politicians are mostly thinking about their own audience. So you don't want to take the average politician doesn't want to take the hit, let's say, in the economy just to stand up to principle. Unfortunately, politicians like that have stopped existing since, I would say, the 80s, right? So the last 30 years, the vast majority of politicians have really no backbone, as they say, right? Anyhow, Coach, any requests? Where would you want to
did
start
yesterday's down day in the indexes change any of your neutrality? I mean, short-term neutrality. I know how you feel long-term.
Listen, we had a we have so far a spinning top followed by a shooting star in the S&P. So that at the very least is a show of momentum loss.
Be nice
We
to see it
know,
close back inside the wedge.
yes, we know that this happened within this area that we had indicated quite some time ago, that is clustered with multiple resistances. So that's also a good sign. But we need now to see some kind of a decent black candle. You know what I mean? Some
Yeah.
kind of a decent move lower to to get higher conviction that yes, something is about to happen from here. Theoretically speaking, the market so far seems to be immune to any type of news.
Everything.
Of course, one main reason from that is the resumption and the extremely aggressive resumption of quantitative easing, right? Because we're not naming it QE anymore, but what we know as a fact is that the Fed's balance sheet has grown by almost like 300 billion within less than 2 months, roughly. Yes.
I think you'll like what I heard they're calling it now.
Yeah,
hump,
but I mean,
hump and pump.
yeah, whatever
You like that, don't you? Hump and pump.
Whatever they want to call it, it's definitely debt monetization. There's absolutely no question about that. And the markets like liquidity, right? And when the markets and market participants, especially in an environment that doesn't produce any return in any of the proper places that you would find the return, also gives you an incentive by, in essence, having the central banks telling you again that we have your back. We are here pumping it, as much as it can go. I think in combination with a lot of people having strong faith that due to the presidential cycle, many people don't know that, but we have many cycles in the economy. One of the most consistent ones is the presidential cycle. So usually, for example, year 4 is a good year. Year 1 is usually a bad year for stocks, and the reason is quite obvious, because they're going to do everything possible to window dress the last year before an election.
Let me ask you this, Steve. Do you find it interesting that with the surge of the last month in S&P's, VIX has not come close to making a new low?
We've mentioned that multiple times, and I'm getting very close to winning that bet with my friend Ures. We had placed a bet like a year ago that this year. I actually told him that I'm willing to place the bet that for the whole business cycle, but he said no. Let's make it for a year. We're not going to see again single digits in the VIX.
Okay.
And yes, this divergence is still.
If we were going to see it, you would have thought we would have seen it in the last 30 days.
We would have seen it already. Yes,
right.
We would have seen it already. Yes, that is absolutely right.
So that's to me a little bit of a market message and tell.
Oh, it is. Okay. I mean, we used to be under an equivalent, let's say, environment, theoretically speaking, at 9, and we're currently at 12. 13. 12,
yeah,
13.
So the new 9 is 13.
Yeah. So and we keep climbing, right? Because we had then another low at 1040. Then we had another low at 1150. Then we had another low at 1190. Now we bottomed, and that was intraday only at 12.1. So as you see, this divergence is still strongly ongoing. Yeah.
I heard, I don't know if it was CNBC, but how sometimes people make these real long shot bets. I know you made a Duke bet with your friend, probably bet $1, but some guy spent, I don't know, $500,000 on April Listen to the strike he bought, 60 calls on the VIX.
Yeah, you told me it's
Oh,
extreme.
okay.
It's extreme, but we know that it can happen, right?
The last chart you were showing looks like we could trade 25 to 30 breaking out
Oh,
of
easily.
that downtrend.
25 is easily. I mean,
Yeah.
usually when we see like, corrective moves lower, which we know that in this market, the rare times we have a correction, they're usually sharp, right? They
Yeah.
might be short-lived, but they tend to be sharp. So we do tend to bounce. I mean, the first real resistance is around there, around 25. By the way, speaking of which, look at the Russell. Again, the Russell,
Yeah.
I mean, has been contemplating so many days with, the idea of breaking out here, but once again, unable to break through this. I mean, it's, it's a really strong divergence as well, right? And as I've pointed since a long time ago, this is also a good indication that the whole rhetoric that the U.S. economy is great, but the only problem is that we have many outside factors that can actually affect negatively our economy is BS. Because if that was the case, if the U.S. economy was strong and all the dangers were, from abroad, then the Russell, which is consisted, mainly from local companies, right, should have been overperforming by far the S&P, the Dow Jones, the Nasdaq, and it's doing the exact opposite. So strong resistance here. Of course, I mean, I'm not blind. I mean, somebody can make a very good argument here that, this looks very nicely as a
like
bull flag.
Yeah.
Right? It does. There's no question about it. It does. And if we do manage to finally break through this like 160, 161 area, then we have a textbook rectangle coming in play, which would then point to new highs in the Russell as well. So I'm not saying that somebody should try to fade the Russell if we break out from this range, because this is going to be a powerful technical formation. And if this indeed ends up being a flag, and we get like a big decisive move above it, and a daily close above resistance, then you do have a technical event that, in my opinion, it would be dangerous to ignore. But until that happens, it's still an obvious divergence. DAX can also, somebody say that it's also like bull flagging here. FTSE looks more like the Russell, but in a shorter term scale, right? I mean, we seem to be stuck here. That is not that bad of a performance, though, considering three main reasons. One of them is that the UK economy has been mired by uncertainty for such a long period of time, right? Two, that we again have, elections coming with somewhat of, an unknown outcome. I mean, yes, the Conservatives are going to be first, like 95% chance, but that doesn't necessarily mean that they will be able to go through with delivering whatever Brexit they have in mind or whatever. So that leaves the third factor that a disorderly Brexit is still not completely out of the window, and considering also the obvious fact that we've had a big rally in the pound, which should have acted as a headwind. The FTSE is not doing that bad. I mean, it's in a range, but for foreign investors that were invested, lower, they've made quite a nice return because also of the appreciation of the pound. Because if you want to, let's say, if you were a US investor or a Japanese investor, and then you wanted to cash out, somewhere here, you would have some nominal gains, and then you would also have the currency gains. by exchanging back to dollars at a very different exchange rate. I mean, we were trading just a little while ago. We were trading at 121, and we're now flirting with 130 once again. So that is something to consider as well. Having to do with currencies, that's why I haven't been in a real rush to jump on the forex market, simply because we covered quite a lot of things yesterday, and I can't say that we've really seen anything much happening. We've seen once again the Kiwi stall at the inverted head and shoulders formation neckline, so it remains at a very, very, very key resistance. But the same was true yesterday. By the way, not FX obviously, but it's worth mentioning that yesterday crude did manage to close below this channel, producing a very big black candle, and that is a very nice indication of a possible breakdown. We're seeing an attempt of a recovery today. We're now back testing the 200 daily moving average, sorry, the 50 daily moving average, and about to back test the broken channel as well. So this looks to me like it's now even more likely that it's going to just, dump lower in the sessions ahead. So I do think that crude is likely now broken. We had warned about that possibility, and it's now a much, much higher possibility. We should know by tomorrow, the day after, worst case scenario. Let me go through some of your questions. Some hardworking and honest MPs deserve re-election. Those who lied to their people and broke their pre-election pledges obviously committed fraud to those who elected them, and most in the electorate want them gone. I support my MP for re-election, says Richard. Yeah, unfortunately, the vast majority of politicians, will put their personal interests above of, the country's interests, unfortunately. And, that's a huge problem. And that's in generally, I mean, it's obvious to those that are looking closely that we have a major crisis of democracy, and I don't mean a specific country now. I mean about democratic countries. I think that changes should be made to the way democracy is being run. Several changes are worth considering. In my opinion, one of the biggest one would probably be not being able to get re-elected. It will reduce your incentive to try to be likable, because you won't have an incentive to get re-elected if that's not a possibility, right? So there's going to be, I mean, if you have nothing to lose because you can't get re-elected, it is much more likely that you're going to do what is best for the country and the citizens, irrespective of the political cost, because there's not going to be a political cost. Richard Dash defined disorderly exit. Clean break can be made disorderly unnecessarily by my partner. Any disorder caused by an adverse attitude will affect them and damage them as well. Yes, that is very true, but don't forget here, because in essence you're referring to the cost to the European Union. Don't forget though that you are considering the short-term costs, but you're not considering the long-term costs. From the perspective of the European Union, making Brexit an easy procedure will entail a lot of moral hazard, because it will make the exit door appear a lot more appealing, perhaps to other members in the future. So I think that they will be mostly making decisions based on that, and not on the probable short-term pain that will include. Let's be realistic, different rules apply to politicians than those to ordinary citizens? Yes. So you admit the EU is a prison of nations? That's a big discussion. Partially, yes. Partially, yes. But if you're asking if my thesis is that the European Union is like some Star Wars empire of evil, that only has dictatorial characteristics, no, that's an exaggeration, right? So I think that, the truth lies somewhere in the middle. Let me see. The problem I have with politics in general seems to me it's just competition and who can bang the chest the loudest. Most policies aren't realistically achievable. I would agree with that last part for sure. Within their time frames, find it difficult to believe most politicians, although I'm a big fan of my local MP. Yeah, I agree. And it's not easy to follow a long-term plan because, as I said, the political cycle makes politicians prefer policies that will have short-term results that will be obvious to the citizen so they can increase the chances of getting re-elected, right? This is the big advantage of authoritarian regimes. Now, don't misunderstand me. I'm not for authoritarian regimes, but objectively, everything every situation has some positives and some negatives. The positives with authoritarian regimes, like China, like Russia, like dictatorships, is that the person who is in charge can more easily have a long-term plan in place because they don't care about them getting re-elected. Of course, as I said before, don't misunderstand me. I'm not advocating, for any form of government that doesn't respect democracy, but that is a hard reality, right? Democracy has that disadvantage. That's why you see China being able to push forward frequently with very painful decisions, looking and having a big, a long-term plan, a bigger plan in mind than what's going to happen in the short term. What's happening with copper? Yeah, we can see that. Let's go ahead and have a look at copper. So copper, quite a nice big day yesterday, still above this descending wedge, but as I've mentioned, you see this triple confluence of resistances here, right? 50% fib, horizontal support resistance area, 200 daily moving average, and it's exactly where we got rejected from when we tested that a couple of weeks ago at 272. So 257, 272, you can view that as some kind of a range. I think that a breakout in either of these directions is going to indicate the next move. So if we do break above 272, I think that we're going to find ourselves at 285 rather soon. On the other hand, if we break through like 257, I think that we're going to see a resumption to lower lows for copper. Anything in between those levels, in my opinion, is more or less of a coin toss. Okay. Now, let me add to this. We know that there is somewhat of a correlation, used to be much stronger, between Aussie, Kiwi, copper, you name it, due to common characteristics like, for example, China affecting them, whatever. So for me, for example, breakout and an initiation of this inverted head and shoulders formation in the Kiwi is going to tilt the possibility of like a move higher in copper. It's going to increase the possibility of something like that happening. Same thing with if we see Aussie pushing higher and finally breaking through that 6930 confluence of resistances. But until that happens, Aussie, Kiwi, and copper remain in a downtrend, right? If you look at the chart, I mean, you can't deny that there is an attempt to rebound, but the downtrends are not invalidated or broken in any way yet. No deal or poor deal with China should see stock sell off. And that's why they're not going to deliver, Gautam. That's why they're not going to deliver any deal, in my opinion.
But he thinks yields could go up too at the same time.
Sell off and bond yields move higher due to the unsustainability of debt. Do you agree? I agree with everything you said. I don't agree with the combination. I do believe that yields will eventually move a lot higher than central banks believe, and they will eventually lose completely control of the yields. So I believe 100% in that.
Just not now.
I don't believe it's going to happen concurrently with whatever happens with the Chinese deal. I think that we will still, if we get like some kind of a bad outcome with the US-China deal, we're still in the phase of the usual Pavlovian response, and we're probably going to see yields moving lower initially in that case. But I do believe that in the long term, or not so long term, central banks are going to lose control of the yields, and the yields are once again going to start moving to completely different levels. And of course, that's going to spark like a major crisis, because there is almost no economy at the moment with the debt levels that we have that can actually sustain what was used to be considered as normal
interest rates.
Interest rates in the past, right?
Yeah. Well, you know, the way I see it is whether this correction has ended or not in bonds, and Blake showed that it may have, and it's possible that there's one more big wave to the upside that could be a 5 in Elliott wave terms, and that could be the end of the 30-year bull market in bonds. One more blow-off rally.
Do we have an interview, by the way, today?
Yeah, Mike's here. Mike's here.
Okay, if Mike's here, just I had one last request, like what's happening here long-term with the USD SEC. And, you know, I haven't drawn on the weekly because you asked for a weekly specifically. But I'm assuming that this will prove to be a terminal formation, right? Now, does this seem it's going to break? Does that mean that it's going to break exactly from here? No, because we might, you know, resume like oscillating in this ascending wedge for somewhat longer. But I do think it's some type of a terminal formation here in the USD SEC. So I would expect that the USD SEC eventually is going to make a big move to the downside.
Thank you, buddy.
Thank you, Coach. Enjoy the interview.
Okay, Mike, welcome back to Face, my trading warrior brother. I'm going to mute you now. And there you are.
There's me. Let me get my screen up.
Okay, this is everyone, Mike Pisani. Add options, Mike. Here's smartoptiontrading.com. He's not related to Bob Pisani, who used to have the real estate beat. He's a much better trader than Bob Pisani.
I always get that question, though, Dale. Like everybody always asks me, you know Bob Pisani? I'm like, my father's name is actually Bob Pisani, but not that Bob Pisani.
Okay, buddy. So anyway,
so you do know Bob Pisani.
Yes, so I do know a Bob Pisani. If I had to take a lie detector test, I do know one.
Well, you know, buddy, it's a much more difficult endeavor to be a trader rather than a reporter, don't you think?
You know, I think you said something when I first came on, Dale, and that when times get like this, you don't have to trade.
Yeah.
And this is an extremely tough market right now. And today looks to be a very challenging day, just right off the start. But yeah, what we do is tough.
This HYG is long? It's what kind of debt is it again?
HYG is the high yield.
High yield, bonds, yes.
Right.
Okay.
And this is you can see how where the market's been going up. We have a lower high on the HYG, and it's rolled almost to the 200-day already.
It's compressing.
Yep. So for me, like, I like to look at the markets. I look at technicals, I look at sentiment, and I use option flow to tell me what's going on in individual names in the overall market. And I use that to come up with a trading plan every day, what I want to trade, what kind of risk I want to put on, or what kind of risk I don't want to put on in general, if that makes sense.
It does.
And
it does. So is this, you're starting with this. Are you getting a market message from this about credit quality deteriorating? Because I did read in the corporate bonds sector, or saw someone talking about it, that a lot of the ratings are, a bit optimistic, because there's a lot of debt that's, corporate debt that's ranked, A, double A, triple A, doesn't belong there.
The corporate bonds have often been the canary in the coal mine, right? They're often the first to go, and you see all the time the market comes in. They're usually what leads us down. So I always keep a close eye on them, but we've been kind of decoupled from it now for a while. While the market's been breaking out and making new highs, HYG has slowly been rolling down. But you see the 200 days it comes in along here, that green line.
Yeah,
you got a lot of support on that.
We're right there.
Yep, and
Almost.
if you look back since the big sell-off late last year into the Christmas rally, right?
Yeah.
And everybody thought I remember people coming on and said we had 20% more lower to go on that. I'm like, are you kidding me? We're not going to go 20% lower from here.
Okay, so so really that was the real negative December, the worst December we had since, what was it, 1929?
Right.
1929. And we've come back, but now we're diverging or unlinking between what's happening in equities and what's happening here, because this looks pretty sideways for, 6 months now, with the market melting up. So does that tell you something, Mike, about the health of the market if we take out the 200-day here?
If we take out the 200-day, I think this market's going to come in, and we're going to see a down move in the market. If we bounce off of here, I don't think the market cares. Switching gears here a little bit. Let me go to the ES, and we've had this beautiful breakout. Let me get a little bit more data in here.
So are do you trade options on HYG, and are they liquid?
They are liquid. I don't generally trade them. I'd rather trade vehicles like the VXX and such, because they're just faster movers. You can better bang for your buck, Dale.
Okay, more reflexive than this.
Right.
Okay. All right.
But this market's been consolidating here for the last 18 plus months, since that January 2018 blow off, right?
Right.
And we're just starting to break out. So for me, when I look at what's going on with the HYG, as long as it holds that 200-day, I think it'll rally back up. And, earnings have been good so far. And, it might be hard to see, but you had this downtrend break. And now you created this ascending channel on the ES.
Yeah.
And guess where we are this morning?
Wow.
Right.
So is that a 200-day there too, or what?
This is the 200-day on the ES, right here, we're on the 8-day moving average. You can see the 8-day moving average since we took it back.
How do you come up with 8, Mike?
I got to give Scott Redler credit for that. It's something I learned when I first started trading. He liked it. I started using it, and I'm like, you know what? This has a lot of merit, and I like it. And for me, I always give credit where credit's due. That's the type of guy I am. But I like how stocks react off of it. It's a fast momentum indicator. I use the
there's nothing new under the sun.
Yeah.
Yeah. So we learn from everyone, don't we?
Yeah, and you're always learning, Dale.
Yeah. You're growing or dying. So to me, this looks pretty critical here. Where's that come in? Around 31.09 or so?
So right here, it's right at 31.04, right where we bounced off of to this morning, almost right to the penny on the ES, right into it. You have this trend line that you can establish here. So to me, today and the next day or two is about this line. If you break it, I do think we probably get a fast, short-lived down move in this market. Momentum comes out, right? It's been built up. The one thing that has been worrying me about this market for 2 weeks is breadth has been thin. And if you use Thinkorswim, you can check that every day by going into the $ADD, right? And you can see how even when the market's been up, market breadth, advanced decliners, has been putrid. And
distribution, then, this move could be distribution. Is that what you're thinking?
I'm thinking that, we've run a lot. There's a lot of money on the sidelines that wants to get in, Dale, but it doesn't want to chase the market at all-time highs. So it may be looking here saying, give me a dip to buy this market. And I do think long time we're going higher.
Okay, but we could have like a 5 to 10% correction. That'd be the last buying opportunity before the S&Ps really blow to the upside. Is that kind of what you're thinking?
I think we could get a correction. I actually think it might be so shallow, it might be down to where we broke out of on the ES around the 3029 area.
Okay.
I really don't think we're going to get, unless we get some very bad news, right? And in this market, we are certainly prone to a lot of news, all basically on China, right? The impeachment thing, nobody cares about. The market, every time there's news on that, the market doesn't even quake.
So you have this line that I think comes in. Where are you calling the breakout level? 3020? Let's see your line that shows it as where you're looking at a breakout, Mike.
Yeah, well, I think this market broke out already, Dale, when it took out 3029.
Okay.
All right. When we took this out, here's the beginning of your next bull run. After 18 months of consolidation, I think we're just starting.
Okay.
And
so let me ask you something. I've seen a lot of breakout fakeouts in my career, and we have had a nice run over that. So if you believe it's a breakout, if we ever start closing back under the breakout, is that your line in the sand for the bull case?
Yeah, I think for me, if you can't hold that breakout level, a retest and bounce off of it is extremely bullish, right?
Right.
It shows commitment.
Right.
If you lose much below the 3,000 area, I would give it to 3,000 because it's such a big psychological number in this market.
Okay.
I'd be really worried. Okay. And then maybe a retest of the 200-day comes in quickly.
Okay. And off this chart gives you what you're going to do in VIX derivative products.
Yep. So I saw you guys talking about the VIX earlier, and let me pull up a chart here. The VIX for me has been an interesting chart this year because every time it's gotten below to 12, it's bounced off of it, right? And when you look
at a new regime, like Steve was talking, we used to trade 9, 10, and now it's 12, 13.
Yeah. And now it's 12, 13, right? And if you look here, we bounced off of it a couple times in the last week. Bollinger Bands are really tight, which tells me it's starting to get ready for a bigger move. But when you're looking for a bigger move on the VIX and it's already at 12, the move is probably up off of here. Yeah. And so what I'm looking at is if we can take out this area, we're above 13 here where we have pre-market. We're at 13, 16. I think you can get a quick move like some of these little pops up into the 20 area.
Okay.
Right. And if you like to play that, you look for things like the VXX. The VXX trades with the VIX. It's extremely liquid. When you look at options on it, for example, which I love about it, I trade it with common stock and options. You can come out here and just going out to December. I mean, look at the 19 calls. You got a 0.40 delta. That means 40 cents for every buck. You have 20,000 out there in open interest, and they're under $1. That's a pretty cheap way to get some.
What's the strike on that?
Those are the 19s for December.
Okay. Wow.
Right. Yeah. So you have a month, and they're very liquid.
Yeah. Okay, and they're almost at the money.
And they're almost at the money. If you want to go a little cheaper, the 20s would work as well. Again, always look at the open interest. Make sure there's a lot of people out there playing it. You don't want to be. See these ones here's at 126. You don't want to touch these. The market makers can do what they want to you to try to get in and out of that.
Yeah, you'll end up paying twice as much for the bid offer, the spread.
Right.
And a lot of unables too, not being able to get executed. They make you want to chase it. Well, that's an interesting look that we have here in the VXX, and the options are liquid. You showed open interest there, so that's an interesting way. You prefer those over just a straight VIX calls?
So I'm a little old school with that stuff. The VXX is actually an ETF, and it has volume in it, whereas the VIX is a derivative of a derivative of a derivative, right? There's nothing actually under the VIX. What I also like about the VXX, which you can see here, is the VXX if you go on, I usually like to use a 5-minute chart on it. I'll blow this up for you. When it's in play, it usually starts leading the VIX. It's usually a little tell.
Nice.
It'll start overperforming the VIX because they're piling into it ahead of the incoming volatility. So you can watch it on a 5-minute chart, and if you see the VXX taking out that high like here, and the VIX hasn't yet, chances are they're going to keep coming for it. That means volume's starting to come in, and it's starting to come into play.
that's a pearl.
Yeah.
So people that want to trade VIX need to pay attention to this for that reason. Okay. I forgot what I was going to ask you after the VIX question. So, any other markets that you're looking at? Any sectors that are standing out to you? One thing I've noticed is pretty general is with the Nasdaq, blowing to new highs. I think half the fangs aren't confirming it.
No, they're not, and we've seen some underperformance in a lot of tech, right? Growth names have definitely been underperforming, and that kind of brings us to where we're going. Is to the value names have seen a lot of flow into them, a lot of overperformance, and where's my IWM?
Yeah, they started buying the stuff that was really cheap for this last wave. Something I learned is when they start buying the trash. Which I'm not saying these companies were trash, but they were way underperformers that, they're rotating into it. It's keeping the market going. That used to be some type of warning sign when they get into tertiary, which used to be like in the old days, Amex stocks and, before Russell was an index. So Russell just can't break out with the rest of the market. Do you have a feeling on what's going on there? It looks like it wants to, but over the last 6 months, it keeps getting to a level and it's unable to. So what are you thinking here?
They keep coming after the Russell. So, to your point, the Russell has been trapped and range bound. It has not made new highs with the diamonds or the Qs or the SPY. And this 160 area has just been a bear for it, right? You can see it just keeps coming into it and getting rejected. And it's got a $15 wide channel. I mean, if you look at it, it's really trading between 145 and 160. That said, this was leading us when the market rallied. This led us, and it's been going sideways here. And you kind of have a little bit of a cup and handle formation here formed on it. And they keep buying calls on it. Yesterday, we saw the December 6th 164 calls. They came and hit those hard late in the day yesterday. So.
And wasn't this the index that was supposed to outperform with a trade war going on compared to the multinationals?
Yes, it was. And it's kind of funny how it's underperformed through this at this point, right?
Yeah. So, I mean, if there's a trade deal, it shouldn't matter as much to them, but it seems like that's what it's waiting for.
It seems like it's waiting for it. I do think that
and these are mainly domestic companies.
Can lead us out. And if you want to take another look, I think the next one that also ran with the banks, and they had a beautiful run. I'm no longer in the banks. I sold my positions, but on a dip, I'd buy them back because again, kind of like, the market's a long-term sideways action. Where other things were making highs, the banks were stuck. I think these are some things on a pullback to watch to see how they hold in. And, my favorite there still remains JP Morgan and Bank of America. JP Morgan new all-time highs in the last 2 weeks, incredibly strong.
So it was starting to advance with all the, worry about yield inversions, right, Mike? But it really propelled, it was really rocket fuel for the steepening to begin in the yield curve. So if you want to buy a break, we may have a pause in that type of action and then continue to steepen. Is that your view on yields? Do you have one?
I don't really have a big view on yields, Dale. I'll be honest with you. I keep lose track of them. Because when the market's worried
take a look at how we've been steepening and lay it over any of your banks, and you'll see that's the bank's best friend is a steepening curve.
Thank you. I will.
Anyway, I can't stop myself. I'm a educator.
Hey, you know what? We all do.
Yeah. So, I really appreciate your views, and I learned something because I used to trade some big stuff, and I didn't pay attention to VXX, and I'm always looking for markets to give me messages that are kind of tells before the event. So that was a pearl. Anything you want to continue with here, Mike?
I think days like today, you have the FOMC minutes at 2:00. I don't really expect much out of it, but the market will probably be very quiet heading into it.
Okay.
We have a tremendous amount of China news. One thing that's amazed to me is when you look at the SPY, and every time we had China news in the last 2 weeks, the dip was immediately bought back.
Yeah.
And to me, you guys were having a conversation. I think some type of a deal is going to get done because, you know, both sides kind of need it, and he needs to keep the market afloat if he's going to be reelected. And my gut call here at the end of the day is that the market doesn't go into recession until after he's the election, assuming nothing happens in between there or a complete breakdown in China-American talks, which I don't think is going to happen here.
Okay. Well, from your lips, do you know whose ears?
Yes. He's sometime 5 miles away from me at my house. Maybe I'll go over there and
maybe
and
Bob
whisper.
Pisani could go negotiate it.
There you go.
Not your dad, the guy, you know. Send your dad too. Bob Pisani's can accomplish anything. So, you know, Mike, what's the best way for people to keep tabs? And do you teach people? Is that part of your service?
I do.
Educating people that, you know, have an interest in options, but, you know, they have a fear of the unknown?
Yeah, I do. So first of all, the easiest way to track me is @OptionsMike on Twitter. Okay, I post a ton of stuff out there for free. I'm doing a free webinar tonight, and where I'm going to go over in great detail what I think this market, what my forward look is, and what I'm doing here. But then you go to my website, smartoptiontrading.com. Come on in. If you're interested in my daily product, it's real-time option flow throughout the day. I do a morning setups video, a nightly recap video, and all the trades and news and option flow throughout the day. I'm also live for about 3.5 hours a day through a chat room interface, Zoom, just like you use here. I love that, by the way.
Cool. All right.
And if you're interested in it,
And
I'm always
you
teaching.
even give people a cup of coffee, I noticed on the last slide.
There you go, a little cup of coffee to get you going.
A little Kahlua in there. My Greek friends probably put a little ouzo in theirs, but you know what, Mike? I have to say this, that your demeanor and your presentation with humility, and I know you're good, you know, makes you one of the best option guys I've interviewed, and I've interviewed quite a few. So if you want to learn about options, I think that Mike has a temperament to be patient with you, and check him out.
Dale, thank you so much. And yeah, I do an options trading and technical trading class for people. If you're interested, come on in, just let me know. Well,
have a great Thanksgiving and Christmas, and you know, I hope every option you buy doubles and anything you write expires worthless. And I appreciate you being here again, Mike, my trading warrior brother. Thank you for your support on Twitter, and I'm always rooting for you. Thanks, Dale. Happy holidays to everybody here, you as well. And anytime, welcome to come back. Thanks for having me on again. And thanks for giving us those key levels in HYG and also in the S&Ps. Appreciate it, buddy. Thanks. All right, everyone. So that's a wrap for us today. Good hunting the rest of the day. And remember, don't just count your option strangles or condors or whatever they call them, and count your blessings. If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings. Adios, everyone. See ya.